Welcome back guys to Trade Pro FX YouTube channel. So one of you asked me, excuse, can I use the ICT concepts to trade in Deriv trading? Yes, you can do that with very easy steps. So the first step is that when you just log into your Deriv chart, what you do is you have entered to your Deriv chart. You see, I told you each candlestick represents the daily candlestick. That's why it has 24 hours. So the first step is just go to the 15 minutes, and when you go to the 15 minutes, this is where you will be looking, doing your analysis. I mean, not to look, just doing your analysis. We will take your analysis just using these 15 minutes. So what will you be checking on this 15 minutes analysis? So number one, at the 15-minute time frame, you will look for a liquidity sweep that as a liquidity sweep that has closed with a wick, not a candlestick body close. So what do I mean with that? So you will check for a wick like this one. I just want to show you using this one. You will check for a wick. Let me pick this one. So what you check is for a liquidity sweep, and then for the liquidity sweep you will look for a liquidity sweep with a wick like this one. Yeah, you will look one with a wick and not a candlestick body. So for a candlestick body, this is the candlestick body. So you won't look for a liquidity sweep based on this candlestick body here. You will look for a liquidity sweep using these wicks, the wrong wicks. So with that, I guess you have first known what you will check. So let me first clear this. Let me first clear that. Yes, so we can proceed and see what next. So in the meantime, you have known what to look. So you have just gotten the first. So let me first refresh this again. So we have known when you open your market, go to the 15 minutes. Then after the 15 minutes, look for a candlestick with a wick, a strong good wick. So I've spotted this one. I want you to give you an example using this one, which we can see here with us. So this wick here, this is a good part for the liquidity to sweep. So I'll just mark my zone there. So that is this is the liquidity sweep. So how was that market? So based on this now becomes the liquidity sweep. So you will just draw your candlestick just from there, but ensure it touches that point there. So the market was moving up, down, then a liquidity sweep came with a good wick there, and this now is what we will consider. So you have known this and you have captured this. Let me draw a good. You have captured this on the 15-minute candlestick. So our next step is to go to the 1-minute candlestick. That is the area I want us to focus. So you'll just go back to the 1 minute. Then this now is the second step after moving back to the 1 minute. So let me go and back test how it went. So after you go to the 1 minute and after identifying that liquidity sweep, in this 1 minute time frame, we want to see the market structure shift. So we want to see the market shift, the market structure shift. So just see, so that's the area. So because it was on the 1 minute, good, this is the area, the zone we are interested in. So you can see that was the area which was of concern. So on the 1 minute, you have discovered this type of shift in the market. So from here, where you have identified the market, you want to see a shift in the structure of the market. So we will check this shift by looking at what you enter the extreme. You look for a fair value gap. You can see where I've marked my zone. So let me first delete this and we leave this point, this candlestick there. So you enter the extreme fair value gap or order block whenever it forms. So you'll just look for a good fair value gap. Just look at this fair value gap and check for an order block at this zone. So just look at it, how it went. This candlestick has been engulfed completely by this one. So this is a complete good order block to enter that market. Reason being, I've talked about this before, how the order blocks should be identified. So this is a good order block to know that now it's now time to get into the trade. So you just enter now using this candlestick after the market has moved, has created this fair value gap, and then now we are about to enter the market, and then the ratio is 1:2. That's what you will be targeting. So ratio 1:2, it's at that point. So what has the market done? This was the area you noted it on the 15 minutes. Then after that the market created these fair value gaps. So I told you the market must come back to fill these gaps here, and remember we identified it on the 15 minutes there. But now after shifting to the 1 minute is where we want to scalp. Most of the people who like using this lower time frame. So you have identified it on the 15. After coming back to the 1 minute, you wait for the market to make a shift in the market. So you first look for whether the market will make these fair value gaps and a confirmation of a fair value gap. So you see the first time the market created a fair value gap, went up, then created an order block by outdoing this candlestick here by creating this strong bearish candlestick and engulfing that one, the behind one. This now becomes the order block, and you enter the market from there, and you pick your first ratio 1:2, and you get out of the market. So that is the ICT strategy, which is usually almost 80% win. So that's how you just check. You first check on the 15, then to the 1 minute. So if you have not understood, I'll still explain more about it. So stay tuned always into this channel. I'll get to show you more and more, and ask those questions and I will explain to them very well. So comment below if you have not understood, and if you have any question, comment below. We will meet in the next video.